Hello, everyone. This is Nikki Yu, also known as Thesis Trader, and you're watching the August 3, 2021 Global Market Update. Let's begin. So the biggest news today is actually Tencent investments. So Tencent, NetEase, and a couple of game-related companies in the Chinese sphere was actually going down 10% today because of news that the official Chinese state media talked about those companies or those video games as a spiritual opium, and is actually electronic drugs. Let's actually read through those scathing comments by Chinese state media um, and the response of the Chinese companies as well. So this was the rule. Tencent is falling. China media is calling the online gaming spiritual opium. So let's understand all the things that are stoking concerns. This is after, of course, the relevant regulatory concerns from the after-school tutoring or the education industry getting disrupted overnight. So because of this, I'm going to read to you a few things. In an article on Tuesday, many teenagers are already addicted to online video games, and China is outlining more curbs in this industry. Their flagship game, Honor of Kings, said to be the most popular online game among students, is played up to 8 hours a day. No industry, no sport can be allowed to develop in a way that will destroy a generation, likening online video games to electronic drugs. The government has vowed to strengthen rules around online gaming and education to protect the child well-being. Last month, it already banned for-profit tutoring in core school subjects, a move that threatened to decimate China's $120 billion private tutoring sectors. Authorities are seeking to limit the hours that teenagers can play, and companies including Tencent have implemented anti-addiction system where they can say that they can cap all the young users' gaming time. Tencent has already been under pressure alongside major tech peers by increasing regulatory action on online platforms. It was barred from exclusive music copyright agreements and fined for unfair market practices. Just last few months ago, the merger between Tencent's Huya and Douyu was actually blocked. Let's go through the news per se and the latest coming out from Tencent. In the afternoon today, Tencent already decided to share that they're implementing double minus double. This is in Chinese state media. Tencent launched a new measure of double minus doubles in the game. Minors under the age of 12 are prohibited from spending in the game. So we are already seeing the Chinese regulations are really affecting most of the Chinese stocks. And you could see that that is apparent in most of the industries. I want to share commentaries about this happening. Tencent's game user base is actually older than thought about. That means that the actual impact in terms of loss of video game revenues is very minor. During the fourth quarter of 2020, minors under 18 accounted for just 6% of China's online game gross receipts. And this is also coming out from the Q4 2020 report. Let's go as well for a few understanding. I want to read Vineyard Holdings 10-cent deep dive. So their holding period is long term. So I want to understand and explain to everyone majority of Tencent's ecosystem. Okay, so the explain like five definition is that it spans gaming, e-commerce, music, cloud, and AI. They are one of the largest entertainment companies in the world, using their strong cash and data generation from their core operations to fund and inform their VC firm, their VC arm. They own the widest reaching social media platform in the world, which is WeChat, along with their gaming distribution, providing them prospective advertising dominance in the future. They're also leveraging these platforms for potentially transformational growth in finance and e-commerce. They've got an outstanding Berkshire-esque portfolio of investee companies and have transitioned excellently from a China-only state-protected imitator to a globally scaled patient innovator. Why will it 10x? Investments are paying off. Tencent's metaverse advertising platform is becoming dominant globally. Tencent's WeChat Pay can capture finance and e-commerce revenue at scale. Cloud growth rate can be halved over the next 6 years, but still generate the entire 2020 sales. The consensus view is, especially the regulation and state involvement, after the financial restructuring. The consensus view is, of course, underestimating WeChat's dominance and optionality, overemphasizing the lack of MAU growth. Monthly average users right now in Tencent is 1.2 billion monthly average users. This is mistake for Tencent as a social media and entertainment company alone because the business has so far branched into industrial business to business. Their thesis, higher than expected consensus sales growth stemming from growth in offshore markets and alternative business to business verticals. This will be shown on August 18, the actual earnings report of Tencent. Multiple expansion of changing sentiment around regulations, catalysts as well. The potential for all the private companies to list publicly. Non-core businesses can expand on financials, causing multiple expansion. The risk, of course, is increasing anti-monopoly regulation, prohibiting M&A and further monetization of existing products. That has been happening already. That anti-monopoly regulation happened with Douyin and Huya, which controls 80% market share and was prevented to actually get monopolized. Of course, the other risk is Douyin, which is TikTok. It becomes a better social media product, taking some eyeball time away from WeChat. Let's take a look at some metrics here. Tencent is currently actually now trading at 20 times multiple PE ratio, if that is trailing. These are actually old numbers already. And then average CAGR estimates is 15% sales growth, 15% earnings growth, and free cash flow growth. Okay, let's go for some of the companies. So during this time, it was Tencent at $80. Right now, we're looking at Tencent below $60. It could open $55 later. Okay, so Bailey Gifford, of course, has a top holding in Tencent, roughly 6% of their flagship portfolio. Bailey Gifford is well known to actually buying big stakes, the likes of NIO, Tesla, NVIDIA, C Limited, and so forth. So this is a high quality, resilient asset that investors globally can actually own. Let's understand the following things. Tencent has ownership stakes in over 350 companies. In one asset valuation, those companies that Tencent owns is already more than $1 trillion in net asset value, which is actually more than double of its current market cap today. Let me go through that valuation report. Okay, let's go through this. This is a great sum of the parts evaluation. I think this was done by a Goldman Sachs. Hope that you can see it. Okay. So their core businesses is number one is still gaming. Actually, let me go through that part for you. Wait up. This one would be easier to understand. So this is how Tencent makes money. Value-added services are your Valorant, League of Legends, Fortnite, Clash of Clans. These are your gaming, your Tencent Music, all of these social media. You've got the Fintech and business services, which is 4.26 billion. So that's like, if this is half, this is essentially 30%. That's your WeChat Pay, your taxes, etc. And then the other is online advertising, which is really for e-commerce companies to do it, 2.6 billion. The other side is your cloud, which is still small, that is also growing. Let's go further on this gems of investments. As I said, Tencent has a lot of investments. Let's read it one all the same. In terms of entertainment, like games, they've got a 37% stake in Epic Games, which owns Fortnite. The valuation being pegged is Unity and Fortnite at 2 times price to sales revenue. C Limited, they own a majority stake of that, 25.6%. And this has actually gone 30x since IPO. C Limited went from $10 to $300. They are a private equity investor in all of these. Netmarble, they are an owner, 17.7% of that. Ubisoft, they own 5%, 7.8% on Kingsoft. They own 17% in Cheetah. So they also own a 5% stake on Shands, 2.6% in Shinwang, 18.6% in iDream Sky, 14% in Glue Mobile, 10% in CSUN, 2% in RPalm, 10% in Bluehole, wherein their entire portfolio, if this was a Berkshire-esque conglomerate, 20% of their entire portfolio, $1 trillion nowadays, $200 billion of which is gaming and entertainment. For the other 18%, let's read that all together. They've got a 37% stake in Douyu, which is the live streaming giant of China. They also own actually Huya through another stake. So other media they own 7% stake in Q Tiao Tiao. They own 13% on Maoyan Enterprises, 17.7% on Kuaishou. They own 7.9% in Huai Brothers, an 18% stake in Bilibili, which makes it actually 18% of their total 1 trillion asset in just the investments alone. E-commerce, they own Meituan, Dianping. They have an 18% stake there. Tencent owns 17.8% stake in JD. Tencent owns 13.6% stake in Pinduoduo. Tencent also owns 11.6% in Ke Holdings, which is Peike. They also own 22% on Ruba. VipShop, they own 8.7%. Yonghui, they own 5%. Better Life, 6%. Haitian Home, they own 5%. NavInfo, 9%. Mogujin, 17.2%. Little Red Book, they own 10%. Tongjie Ilong, 22.4%. Lechu, 15.6%. That comprises 15% for their e-commerce formats. Autos, they own Tesla. Right now, it's 0.5%. They also own NIO, 16.3%. So that tells you 0.5%. If Tesla is a $1 trillion industry, 1% of 1 trillion is $10 billion. Yeah. And they own 0.5%. So that's $5 billion in Tesla. They own a 16% stake in NIO. That is their version of Chinese Tesla. Okay, they also own banks, financials. So in the financial space, they own 30% of WeBank, the largest digital bank in Malaysia. They own CICC, 5% stake. They own 30% in Futu, the largest Chinese brokerage firm right now. They own 11% in Chong'an Online. Futu is essentially the Robinhood of China, allowing Chinese people to actually invest globally and especially in the US markets. Others, they also own a 9% stake in Spotify. They own an 11% stake in Snapchat. They own 72% in Yixin Group. They own 10% in Koolearn, 7.7% stake in Waymobi. They own 4% in Wanda, 4.5% in WPS, 6.6% in Sunline Tech. Actually, last night when Square acquired Afterpay, it should be known that Tencent also owns Afterpay and is generating a $1.5 billion gain on that investment. That is a 30x move for Tencent. All in all, Tencent investments alone is worth already from a stock price to NAV at least $900 per share. Now, how about the core business? The Fetch has also invested in, I'm not sure if Tencent just recently bought more stakes in NIO, but these things are actually just telling you how valuable Tencent as a company is. In fact, buying Tencent is buying an index in itself with huge investments in the largest entities from games, live streaming, e-commerce, electric vehicles, and financials, insurance, etc., even better than the Hong Kong index itself. Now, in terms of their core business, of course, Tencent, just the core business alone, even from just Tencent videos. So gaming, it's about 500 billion market cap. If you just multiply that to 22 times their earnings for 2022. Tencent Music, Chinese literature, Huya, they own a 48% stake there. So these are actually negligible. The large part, example, WeChat and WeBank, which they own 100% stake and 100% stake in the cloud. Their cloud business, even if you just compute it for 10 times price to sales revenues, is already hitting $70 per share. So advertising is another $100 per share. Fintech is another $100 per share. Gaming, Tencent Video, etc. All of that is already $430 per share. In essence, if you're buying Tencent today at $430, you're already getting everything for free. All of those investments are for free. You only paid for the gaming inside. All of the investments, the growth of Epic Games, the growth of Valorant, the growth of, to me, actually, the Epic Games is going to be a 10x mover in the next 10 years. So this $1 trillion, the discount here is going to be bigger and bigger as time goes by. The risk, of course, is that they are supposed to sell all of these gems early on, either forced to sell them, etc. But I think that Tencent can do what Berkshire Hathaway is doing, which is never selling their crown jewels, which makes Tencent the de facto cheapest way to enter the Chinese market and own a number of industries without owning the Hang Seng Index in itself. So it is actually a conglomerate. It's like just owning a Berkshire Hathaway and in the best investments of the decade. Okay, so it's of course also investing furthermore in AI and cloud. So you've got those results coming out this August 18. We'll read through that. Okay, so let's understand further. So they are a global venture capitalist, quite similar to a SoftBank. They own Uber, Neo, Nvidia, C Limited, Obtech, Gojek, Snap, Flipkart. It carries watts of optionality in their existing platform. So Tencent is sitting at several growth hubs: the Chinese consumer, the mobile virtual world, the broader Asian business-to-business tech, while leading their markets that are still large, growing, under-monetized, and under-penetrated markets in mobile advertising, e-commerce, payments, media, and gaming. Why is it still under-penetrated? It's about 25% penetration rate so far. So theirs is a great business with high margins, strong cash generation, recurring revenue, minimal capex requirements. They're founder-operator-led with strong executive team, showing themselves to be focused on sustainable long-term value creation. The operating system of China is WeChat network, where all work, home, retail, transport, and social life within the country are spending an average of 1.5 hours on the app. Tencent is in the enviable position called the super app, directing all the traffic infrastructure towards their offerings and various holdings. A typical WeChat user engages WeChat 11 times per day. This is actually what Grab's super app wants to be for Southeast Asia, what WeChat has accomplished in China. 7 a.m., you're looking on your WeChat moments. 7:45, you're riding to work with Didi Chuxing and WeChat, which is also a Tencent investment. You are buying breakfast using WeChat Pay. 9 a.m., you're beginning work with WeChat groups. You're catching up with friends as well, WeChat groups during your break time. You're buying lunch using your Lucky Money. You're shopping online through your JD.com or Pinduoduo. And then you're going back to your moments on the way home. You're going to buy some groceries using WeChat Pay. While on the way home, you're watching sessions, WeChat moments, WeChat groups, playing games. And then in the evening, you're going to browse WeChat moments again before you go to sleep. Essentially, what Facebook, Amazon wants to do is something that WeChat has already accomplished. Okay, a brief overview. This is what it looks like with a WeChat Pay. You have access to Meili Shuo. This is a Pinterest-like website enabling women to find personalized clothing and skincare products. You've got access to deals via e-commerce companies, Jingtong. Right now, WeChat is also going to grow because WeChat and Alibaba, well, both entities, because they opened up their ecosystems towards each other. So you can access WeChat's wealth management products. This is quite similar to Ant Financial. You can easily pay your utility and phone bills. You can use them to actually send ang pao as well if you want to. They've got the red packets. WeChat Pay also allows developers to run their third-party apps. So Didi Chuxing and all the other taxi providers. I think right now Meituan is also doing that. So Meituan Tianping, you can do group buy. Tazong Tianping is a group buying brand that is similar to Groupon. A few Western brands can now be integrated into WeChat wallets, such as Starbucks. So the real key is their capital allocation. So they have invested in roughly 800 companies 20% of that have grown from startup to a market value of unicorn status, placing them among Sequoia Capital and SoftBank as the most successful venture capitalists out there. So their WeChat data, their domain expertise, and their cash generation from their core business have suited and put themselves in an ideal location to be a leading Asian investment house, attracting both deal flow and talent. So they want to be the Berkshire Hathaway of China. It's not they want to be, they already are. So additionally, Tencent is of course making a lot of bets in the metaverse, the evolutionary phase of the internet, which Facebook also said is going to happen with a 40% stake on Epic Games. I'm pretty sure that Tencent is a huge winner in the metaverse. Each of these themes will be unpacked. Okay, so this is Tencent. You could see the QQ era, platform expansion. The WeChat era was 2010 to 2015. And then last 5 years was the investment era, wherein they use all of their cash generation to take stakes in Tesla, Spotify, Snapchat. Snapchat is actually a 10x mover as well. So they've done really well. So Tencent's investments have done quite so well. They've invested in all the developers of PUBG, Call of Duty, mobile. So online gaming revenues is very popular. And as was said, most of these are actually above 18 years old. So even if there is a crackdown on minors, majority age, if my memory is correct, is about 30 years old for those who are spending and playing games online. So mostly it's not really the young kids. So there's never going to be a Roblox in China, which is really catered to the 13 years old below. Okay, so from a revenue perspective, you are seeing that Tencent's largest investments happened 10 years ago. They own 25% of Sea Limited. They launched 2011 WeChat. 2012, they owned 40% of Epic Games. WeBank was launched, 17% of JD.com. 2014, they launched and owned 17% of Pinduoduo and 20% of Meituan about 2 to 3 years ago. And Tencent Music Entertainment was formed about 6 years ago. So these are really leveraging their dominance of social media and gaming, creating a platform where people shop online, pay for goods at physical stores, settle utility bills, split dinner tabs with friends, hail taxis, order food delivery, book theater tickets, hospital appointments, and foreign holidays. WeChat has it all. Unlike other companies wherein, the closest comparison will be Facebook and TikTok. But even then, it's still WeChat that wins all throughout. Since Facebook hasn't integrated payments yet, they hope to do that, but it wasn't allowed. Their Libra currency was not allowed. Okay, so furthermore, let's go to the metaverse here. Anyway, all of these is through vineyardholdings.net/Tencent. You can actually check it out. It's a very well-run deep dive. That's why I'm reading it for you. Let's go through the stats. WeChat mini program stats. There's now 3.2 million WeChat mini programs. It's quite similar to how Apple's app stores are. So you've got apps, you've got in the WeChat mini program stats, you've got 410 million daily average active users with 18 minutes spent per day. So of course, one of the biggest WeChat mini program that won was Pinduoduo. WeChat e-commerce mini program stats, 586 million monthly active users. Driven by COVID-19 pandemic, it was also growing about 36% year on year. So in terms of mini programs type, most of the apps are 22% e-commerce, 21% daily services, tools are 13.5%, food and restaurants is 4.5%, social media 4.5%, games 6%, others 28%. So when I see this WeChat mini programs, I'm really reminded with Apple. So that's why this is the operating system from which all the companies are doing. So instead of having a website, they do a mini program. Furthermore, how users are accessing WeChat mini programs. So 63% is social sharing. This is the largest portion of WeChat mini programs. Share button allows you to share the content link to friends or in WeChat community. Customers are accessing easily the mini program's favorite list navigation drop down. QR codes are widely used by merchants, converting offline visitors to follow the official accounts and WeChat mini programs. Okay, so a number of things happening here. Because of social sharing, this is the most important part. Merchants are creating interactive visual WeChat mini programs to boost consumer engagement and social sharing, which is actually boosting your digital advertising arm. Gamification, brands are using WeChat games to leverage offline, online interaction and immersive experience. WeChat Work, merchants are using WeChat Work to segment and enhance the efficiency of communications with their clients. Live streaming is huge, live streaming in e-commerce. So they're translating and converting that offline traffic to online, providing that service to their online customers. Merchants can also use the mini programs to reach the Chinese consumers in innovative ways, cross-border e-commerce. We have AR virtual experience. Beauty and luxury brands can embed AR technology, providing a suite of virtual experiences for online shoppers. So these are just some of the key friendly mini programs inside WeChat. So in a nutshell, live streaming are changing the B2C or business to consumer dynamic. It's actually so it's like a direct to consumer play. WeChat is the world leader for whatever would become the metaverse. Customers play games and gifts, personalized products, transact inside the shops, pay via WeChat Pay without ever moving away from their WeChat app. So usage-wise, you can see the R spent in Asia Pacific is very huge. Growth in finance apps. So 2020 mobile landscape at a glance. So far, there's about 218 billion app downloads mobile. $143 billion is spent on the App Store, 4 hours daily time spent per user. Mobile spend is about $240 billion, and venture capital for mobile technology is $73 billion. This tells you that the super aggregator for all mobile traffic is WeChat, which is really going to win in all these mobile spending. Level 3 aggregators do not own the supply and they don't incur supply acquisition costs. Social networks are level 3 aggregators. Initial supplies provided by users who are both users and suppliers. Over time, as more and more attention is given to the social network, content creators add their content to the social network for free. Level 3 aggregators are predicated in a massive number of users, which means they're usually advertising based. They're free to users. An interesting exception is the aforementioned app stores. In this case, limited market size made up significantly increasing revenue per customer available to app developers with suitable business models. Super aggregators operate multi-sided markets with at least 3 sides: users, suppliers, advertisers, and have zero marginal cost in all of them. So that just tells you how hugely profitable Tencent's ecosystem is, their operating system. Let's go context beyond WeChat. Okay, Tencent is a veritable powerhouse in all other industries, leading all the bar cloud infrastructure. However, they do face a behemoth of general competition with Alibaba, which is really also competing. They've also got a lot of entertainment competition, Bilibili, NetEase, ByteDance, and increasing anti-monopoly regulation. So you've got a lot of regulation as a huge impediment. But as for gaming, so far, we don't see a potential competition right now. MMORPGs are free to play, pay to win. Global game superpower. Let's go to this. Tencent has been investing heavily into gaming. Their market share in China's domestic games market is 43%. Overseas revenue is 21%. They've done a lot of game deals closed in just the last 3 years. Like 2019, they had 10 deals, 2020, 31. In 2021, as of May, they've closed 50 plus deals. That means that they are investing more and more of those cash flows into buying more partnerships, whether that be Nintendo, Pokemon, Electronic Arts, Ubisoft, Call of Duty's obtaining licenses with Activision, Call of Duty, PUBG, marketing advantages, League of Legends, mobile games. So they have the top 2 mobile games published 2020. Honor of Kings and Peacekeeper Elite is done by them. The third place is actually published by Alibaba, Three Kingdoms Tactics. So these are their competition, Alibaba, ByteDance. Yun. From their Chinese gaming market share in 2020, Tencent has a 56% operator stake, 17% is with NetEase, and yeah, so it's really dual. And then NetEase is from a developer stance, meaning they just did their own game for 34%. 0.7% is Tencent, 17% is with NetEase. So they have a very impressive intellectual property base. So watch, socialize, spend, play, participate, create. Outside of gaming, right now in short form videos, indeed, ByteDance owns the market with Douyin, TikTok. But Kuaishou right now is a close second. So 26% market share for Kuaishou, 38% for Douyin. This is still an important battleground. They reckon that 20% of time spent will be on short video apps. Douyin and Kuaishou are the clear market leaders here. So let's read the numbers here. Only 18% of Douyin users have more than 1,000 yen spending power. Majority are just late teens and early 20s. This is the toughest to break through and is likely going to increase in ARPU as they age. So similar to like a Snapchat, right? So for this reason, both Douyin and Kuaishou are moving heavily into live stream, longer form video, and e-commerce. Kuaishou has 300 million daily active users, 170 million watch live stream, 100 users engage in live stream e-commerce every day, making Kuaishou China the fourth largest e-commerce platform in terms of DAUs. Unlike Douyin, Kuaishou is targeting rural audiences predominantly. These users are heavily engaged, not yet monetizable, and the content is usually low quality. However, Kuaishou is too competitive. It is not likely that Kuaishou will compete with Tencent. The high ownership stake means Tencent will benefit from Kuaishou rather than be worried by their growth. Okay, now for TME, Tencent Music Entertainment, this is similar to Spotify. They spend considerable sums buying music licenses. And within the music industry, the only real competition of Tencent here is NetEase Music. Even so, the market is quite saturated and they're looking for growth in live streaming, online karaoke, podcasting, and offline performances. So Kugo, which is Kugo Music, QQ Music, is mostly dominated already by Tencent. The top three is all Tencent. Kugo Music, QQ Music, Kuo Player. As for fintech, you could see that foundationally, Chinese finance is app-driven. Just to show to you the numbers of PayPal versus Ant Group. Ant Group has more than 1 billion Alipay users. PayPal has about 320 million. Even if right now they grew at about 400 million active accounts, that's still a far cry from Ant Financial Group. So Ant Financial is like 4 times or 5 times bigger than PayPal, sometimes 10 times bigger, depending on the growth revenues that Ant Group will share later on this 2021. So third-party mobile payment market is already dominated by Alipay and Tenpay. In terms of themes, you already see that Alibaba and Tencent are already investing in these secular trends. And so whether it be whichever node the world goes to, Tencent and Alibaba has already made the right bets over the last 10 years and will actually dominate those industries. And it's just going to be a matter of time before the market pays up these numbers. I would like to share to you how vast the valuation is right now. This one is a very good way to see it. If Amazon versus the top 10 Chinese internet were combined, you could see Amazon right now is trading $1.9 trillion market cap. Tencent, 584, Alibaba, 532 billion, Meituan, 184. Even if you add them all, Tencent plus Alibaba plus Meituan, PDD, JD, NetEase, Kuaishou, Baidu, Didi Chuxing, JD Health, you'd still come out with just $1.77 trillion market cap. Seeing this and knowing that these are actually bigger entities, even if we know that Tencent and Alibaba is a majority of this market cap, you could see this is about 500. This is about 1.1 trillion versus 1.7. It's like what's that? 60%, something like that. So you could see that majority of all the Chinese tech can be bought by Tencent and Alibaba. So just wanted to share that interesting article for you, given the situation right now. So what I've been doing is actually just investing largely with large companies. So Alibaba is still a hold for me and a buy still. Still own Tencent. I've been trading some of it in and out, and then still own a lot of. I want to own some U.S. companies if I could enter at a cheaper price. Okay, so pretty long. Let's see. Do you think Pinterest will be recovered after the massive sell-off? I think like PayPal can actually go down and Amazon can still go down. So I'll wait a bit because PayPal and Amazon are actually already great companies, but the market is willing to say that it's priced for perfection. Might as well actually sell it first rather than for it to go up. So in the short term, PayPal and Amazon, I think, would probably just consolidate, not really go as huge of a run until the next 6 months. For Pinterest, let's go for the numbers. I haven't read the Pinterest numbers. I did see that it fell 20% down on the earnings call. So let's go there. Pinterest earnings. Chart was 20%. Chart has a support at $50, but I think the bigger question is, can Pinterest actually manage to grow those average revenue per user? Let's go to their second quarter results. I want to see it first. So their revenue grew 125%. Their monthly active users grew 10%. I think this is where some people were actually very cautious about the lack of growth in their global monthly active users. Net income is $69 billion. All right. So second quarter results reflect both the strength of the business and the recent shift in consumer behavior. While we are navigating through the pandemic impact, Pinterest is focused on building the long-term transforming. Okay. All right, let's see. The ARPU highlights. There's a huge growth in their global revenues brought about by United States. So very much the strength of Pinterest has been doing well with mostly United States, although their international was also growing 300% here from 41 to 133. Monthly active users are just slow. There was a decline in US and there was a slow increase in international. ARPU did very well. All right. So I think I know the story here. People sold down Pinterest mostly because of this drop. Because United States monthly active users declined 5% for the first time. People are actually not looking at the fact that average revenue per user globally actually doubled from 70 cents to $1.30. That's actually good. Engagement has continued. So yeah, I think that even if the company just is static at 500 million users, if they can generate about $600 million in revenue in just 3 months, this is actually not bad. Yeah, I'll be willing to buy some Pinterest. Let's take a look again on Pinterest charts. So far, by the way, on Tencent, I bought in at $425, $430 Hong Kong dollar. Okay, so for Pinterest, we have seen that huge drop from about $75 all the way to $57. The first support we could see here during May was about $55, although I think because of the decline in monthly average users growth and the general skittishness of the market, try to see if you can enter first at 52. If there's an entry point here at 52, 10% lower. So I'll still wait for a consolidation, but we could see that the gap up here was actually getting filled. So the previous gap up here around November 2020 is now getting filled here about $50. If $50 break, the next support will be 30 or 40. So I don't think that there's any fundamental problem with Pinterest, just a matter of valuation concerns and the decline in MAUs. Not really a huge problem. Even for PayPal and Amazon, I don't see a huge problem, except just understand that they are really expensive. As you could see, the cheapest right now is not in the US. So the cheapest stocks are actually all, it's not in US tech. So some people are actually willing to take profits on these numbers if they're actually not able to grow. So that's it. Okay, thank you very much. Bye-bye.